you start a business, you need to decide what entity you are going to be. So obviously we have sole proprietorship, partnership, we have corporations, both the C Corp and an S Corp, and then an LLC. Yes. There's also nonprofit organizations, and there's some other things. And we've got benefit corporations and B Corps, but we won't get into too much detail in all that because that's pretty technical. But
right.
This is not legal advice. This is, just meant to be some guidance and things to think about. When you do go set up your business entity, you should be talking to a professional CPA like Claire. You should be talking to a business attorney. Make sure you get a consultation because some of the things we're going to talk about are going to depend on your overall tax picture. In other words, are you married? Does your spouse have an income? What size income do they have? What kind of risk do you have in your business? Are you trying to personally shield yourself from that risk in the business? So this is all our disclaimers before we dive into it. So Claire, first start us off with kind of the most simple, which is both a sole prop and a partnership, basically. Yes. The same thing, but one has one person, one has multiple, right?
Yes. So by default, if you start a business, you don't form a separate entity. You are either a sole proprietor if you're just one person, or you are a general partnership if you're more than one person. And the only difference tax-wise is that a general partnership has to actually file a separate return, doesn't create any additional tax, just a separate reported on this other form called a 1065, and then it then gets taxed on your personal return. So it's just a matter of where you report it. That's the only difference between the two. And that would be the standard, most simplest way. Both of those would be subject to self-employment tax, assuming that these are active businesses that you're involved in.
Which is running at what for California? What's the self-employment
Well,
tax?
The self-employment tax is basically, if you think of it as equivalent to the Social Security and Medicare taxes that get withheld on your paycheck as a W-2 employee, it's pretty much equivalent to that. So around 15% is what you're talking about. You'd get a deduction for half of it. As because you are both the employer and the employee because you employ yourself. So that's kind of the idea about why you get a deduction for half of it. So, but you don't pay yourself through a payroll. It's just a tax that's assessed on your net profits.
Okay.
And then you get a deduction for half of that on the front of your tax return.
Great. Okay. So let's talk about the types of businesses that would be, good to look at this. We'll just say sole prop category, right? So let's talk about liability. Let's talk about what the word pass-through means, all that good stuff.
So traditionally, pass-through hasn't really been used as a sole proprietor term because it's just, you
are the business.
Yeah, you are the business. It's taxed on your return. And so it hasn't been referred to as a pass-through.
Yeah.
Now you do hear it referred to as a pass-through with this new 20% deduction that people have probably heard about. Just for purposes of that, if you're reading or hearing about it, sole proprietor does meet that definition of a pass-through for that purpose.
Okay.
But otherwise, it's never been referred to as a pass-through.
Okay. In a sole prop or partnership situation, as you said, you are the business. There's no delineation between the two. So So when would somebody, would it be right to do that?
So a lot of it depends on what kind of business you're doing, because obviously some businesses you have a lot higher risk.
Yeah.
Like a doctor or a lawyer or anything like that, where you're more likely to get sued for something.
Yeah.
Liability might be a bigger concern. But there's always you always have to consider both the legal reasons why you might want to form an entity and also the tax effect of forming the entity, because generally it's not one or the other. It's usually a combination of both. And some people, they have such a high risk, in their business that they absolutely need that liability protection, even if it doesn't make sense tax-wise yet.
Yep.
And then other people, it's kind of a combination of the two, where maybe they just make sure they have really good business insurance until they reach a certain threshold, and now it makes sense from a tax perspective as well, and then they can form the entity from that point.
Yeah.
So it's like everything, it always depends.
I know, exactly.
Depends.
This is why this conversation is tricky. I have entrepreneurs come all the time to Hera Hub, and what entity should I be? Well,
yeah, it always depends. And,
Yeah.
and you hear people a lot of times like throwing out, this is the best entity. But there is no best entity. If that was the case, there would only be one.
Yes.
And nobody else would select anything else.
Yeah.
So everything depends on your situation. What type of assets are you holding? What type of business are you doing? What is your exit strategy? Like some people, their goal is to go public. Well,
Yeah.
that would change your whole strategy.
Yeah.
Or to get like angel investors changes how you want to structure. So a lot of it depends on where are you now. If you have a plan for the future, what is that plan? Do you have an exit strategy? Are you planning to pass this down to your children?
Yeah.
There's so many things to consider that whatever you already know or have in your plan, you need to make sure that both your lawyer and your accountant and a business advisor or partner, they're all aware of this.
Yep.
So that you can make a decision that is both good for you now and hopefully easier to transition into what you want in the future.
Yep.
So, you want to minimize having to like shut down an entity and start another one unless that was part of your plan.
Yep.
So it's just a hassle and
Absolutely.
burden.
Yeah.
So,
And the point you made, I think, is important to emphasize, which is you're not married to that entity, so to speak. Meaning you can change, right? You
Right.
can, and that's what I see a lot is folks that are starting businesses, maybe a service-based business or consultancy-based business. Let's just say I left corporate and I'm going to start a social media consulting company, right? A sole prop is probably fine initially, right? Like, why have the $800 a year expense of setting up an LLC if you don't have to, right? Not a lot of liability. And there's really no need to necessarily separate the entity from you as a person.
Yeah, and a lot of times too, it also depends too. Sometimes people have like multiple ideas about ways to make money or multiple streams, and they're really kind of just testing to see what sticks.
Yeah, good point.
And in that situation, maybe it is best to have, just do it as a sole proprietor or maybe more than one sole proprietor. And then once you kind of get into a rhythm and decide, okay, this is my direction, this is what I want, and you have a plan, then maybe at that point it's, time to start talking about entities and if you're going to bring in a partner or you're going to have investors and all of that kind of stuff. But like you said, you can always change the entity. So it's not like you also have to have your entire career and retirement strategy mapped out in order to form an entity, because there are things that can be done to either change an entity to another type, shut it down, start another one, contribute the assets. So it's really just about communicating what you know right now to make the best decision. And if you have a plan for the future, just make sure that's communicated.
Great point. Yeah. So last thing to talk about here, or last question I guess I have, is let's, as simple as possible, talk about this concept of pass-through as it relates to, let's just say now I have grown my social media consultancy business. I've taken on some employees. Maybe I do want to bring on a partner. And let's just say I decide to set up an LLC, right? So now I have a separate entity. I'm the person here. Here's the entity, right? And let's just say that entity nets $100,000 that year. How am I then, whereas a sole prop is, me, myself, and I, we're one and the same of the business. Now this entity is now feeding me as a person in regards to taxes. It's filed separately.
Yeah, so if you're an LLC and you just basically say, I'm an LLC, it's just me, and you don't make a special election, because an LLC is the most flexible type of entity. You have multiple ways that you can choose it to be taxed. By default, it's taxed as a partnership, but if you're one person, because there is no such thing as a partnership with just yourself, or there's not supposed to be, it's considered disregarded. So it would get reported on your Schedule C, just as if you're a sole proprietor, but you do have to do state filing depending on what state you're located in and what state the LLC was formed in. Otherwise, it's exactly the same. But if you choose to tax it as another entity type, you can make an election to tax it as a C Corp or as an S Corporation.
Why would you do that?
Well, LLCs, for legal reasons, are simpler to maintain. There's a lot less legal requirements with an LLC. So
Okay.
sometimes lawyers will suggest setting up an LLC. It's simpler, and then you go and you say, but I want it to be taxed like an S corporation, or I want it to be taxed like a C corporation.
So you just decide.
Yeah, you just make a decision.
Okay.
So that's where you just talk to everybody and say,
Okay.
okay, what's best and what's
Okay.
most flexible. So, so
Can you give me an example of why that would be the case? I mean, what would be...
well, like, for example, you might have an LLC that you are paying self-employment tax.
Okay.
So if you could potentially make an election for it to be an S corporation, for example. S corporation flow-through income is not subject to self-employment tax.
Got it.
You have to take a reasonable wage,
Okay.
which is, reasonable.
I can't
is
just
all very...
pay myself in dividends?
No, you have to pay yourself a wage.
Okay.
Reasonable kind of varies, and it's one of those, what is reasonable?
Okay.
Generally somewhere between like 50-70% of the revenue, whatever you pay yourself, if you are the person, right? Yeah. So that wage income will be subject to employment taxes, which is equivalent to the self-employment tax. But that remaining net profit is going to flow through on your tax return, and it's only going to be subject to income tax, not the self-employment tax.
Okay.
So a lot of times there's a tax reason for it. And then also sometimes it's just a matter of, maybe you've got another partner that you bring in, and that structure is more beneficial to them.
Okay.
And you can also do the same thing with a C corporation. C corporation is a totally different tax structure, but if that was the tax effect you wanted. So that's one of the reasons LLCs are really popular, because you could go and form your LLC, and then when you reach a threshold, you could make an election, or you could make the election up front. And that's one of the reasons that they're very popular.